As long as inflation is around 2.3% and there isn't any deflationary flow through from lower oil and commodities, then a rate hike will be on the cards next month. Halley, OANDA Asia Pacific. With 98% of the votes counted, Emmanuel Macron has claimed victory in the second round of the French presidential election, winning by more than 30%. This was the market's expected outcome, and the euro has strengthened in response. How do you see his win shaping market activities this week, and what does this mean for France?
Well, I think it was reasonably positive for France in the short term, and it's certainly positive for the eurozone in the short term, although we've actually seen the euro drift lower today on profit taking. As you just said before, it was completely priced in 100% that Emmanuel Macron would win. Going forward, I think the big issue here will be whether he wins majority in the legislature elections in June, or whether he has to form a rather unstable sort of coalition. If it's the latter scenario, then a lot of the reforms that he's been touting, which have been very favourably looked on by the markets, etc., may very much struggle to come to fruition, to be honest. So I think, although we're basking in a slight afterglow at the moment, and euro has generally taken it quite positively, we are going to have to see the outcome of those June legislature elections to get a better handle on whether this is all going to work out very well for France, or it isn't such a good situation after all.
This week is Super Thursday week for the UK. What do you think we can expect from the Bank of England?
I think the Bank of England will be steady as she goes. Certainly there'll be no movement on interest rates, and I think they will be quite comfortable with them and the outlook for them going forward. And I think the main reason for that is that we're in the early stages of the Brexit negotiations. And I don't think that the Bank of England are going to want to see the pound strengthening markedly, and they're not going to want to rock the boat possibly economically either with the UK at the moment, ahead of some more clarity on where these negotiations are going. We've seen London property top out, and that's starting to move back down, so that would be one of the pressures that would have been worrying them. And that's certainly been assuaged in the last few months.
And Jeffrey, on Friday, US inflation figures will be released. The current market estimate is that inflation will decrease to 2.3%. Do you agree with this?
Yes, I think actually what the market will really be looking for here is some clarity on the US inflation figures vis-a-vis whether next month's FOMC meeting is a live meeting or not for a rate hike. We personally think that it is, and I think as long as the numbers come in at 2.3% or thereabouts, the market will be quite comfortable that there will be a rate hike next month after the fairly good non-farm payrolls on Friday. If we do have a large miss to the downside, that will probably take some of the heat out of the Federal Reserve's dot plots. And we may see that the US dollar comes under pressure after that, simply because the pace of the hikes may not be as much as everybody thinks they are. But certainly I think as long as it's around 2.3%, and there isn't any deflationary flow through from lower oil and commodities, then a rate hike will be on the cards next month, and the US dollar should stay bid on any dips against most of the G10 currencies.
Thank you for joining us today, Jeffrey, and sharing your insight. That's all from myself, Celeste Skinner, and today's Week Ahead. But tune in tomorrow with Jessica Walker for our analysis of the silver market. See you then.